The cybersecurity industry is one of my favorite industries for investors, and understandably, my viewers and members are asking me, what do I think about Rubrik? What's the latest development at this cybersecurity company? So I'll share with you some details here in response to all my subscriber requests. So thank you again for requesting this video. If you want to request more videos, just leave them in the comments section. I read every single comment, even if I don't respond to every single one.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So, Rubrik's management team, in its recently completed quarterly earnings call with Wall Street analysts, highlighted that their subscription annual recurring revenue surpassed 1.25 billion, which is up 36% year over year. What this means is in their latest month that they're reporting, they were at an annualized pace of 1.25 billion in recurring revenue. Net new subscription recurring revenue reached 71 million in the second quarter. So that's incremental contracts they signed for 71 million annualized recurring revenue. Their subscription revenue overall came in at 297 million, and that was up 55% year over year. More importantly, the metric that I like to look at is NRR, which is net revenue retention. That measures how valuable your service is to your customers. If your customers like your service, they're going to keep staying with you and increase their spending with you. So the net recurring revenue remains strong at 120%. That means customers in the second year of service with Rubrik increased their spending by 20%. That's a good indication of a strong customer value proposition, which, as you know, I devote an entire chapter to that segment in my book. It's one of the more important steps I consider when I'm evaluating a business for investment. It demonstrates to me that you're providing a good value to your customers, and so your customers will keep coming back. And also, new customers, when they find you, they'll evaluate your service compared to the price. They'll find it attractive and join your company. Additionally, the company is improving its profitability, where they once again made a material improvement in their contribution margin, which was up 1,800 basis points year over year. They also generated positive free cash flow again. This has been several quarters now of positive free cash flow at the company, 57 million in the most recently completed quarter free cash flow. Now, that's an incremental step forward and a huge inflection point for companies. Once they hit that positive free cash flow, it becomes a step lower in riskiness because now they don't have to go back to investors to ask for more money. They can sustain the business, they can self-fund the business, and of course, they might go back to investors if the opportunity presents itself, if it's an attractive situation, but they'll no longer need to go to investors in a situation that might cause the company to be desperate and accept terms that are unfavorable and unattractive for existing shareholders. So that's an inflection point, a big positive that reduces the riskiness of this business. By the way, this document I'm reading from is the company's most recently completed earnings call with Wall Street Analyst. I made this document available for my channel members, and you can join my channel for less than $5 per month. You see the link in the description for all the benefits you get for a channel membership, and these highlighted conference call transcripts are just one of the many benefits, and there are dozens and dozens of these already available, and I'm adding to them regularly. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.